Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to be back to bring you another investor update. Joining me today is AVP Sales, Winston Wong, and my co-host for today. Welcome, Winston.
Thank you, Rachel.
On today's episode, we will be discussing GraceKennedy Limited and Wigton Windfarm Limited. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you're ready to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. So let's kick things off with Wigton Wind Farm, and then I'll pass over to Winston so he can do his analysis on GK. So the usual recap: Wigton is Jamaica's largest renewable energy company with a market cap of 11 billion. It's one of only two publicly listed firms active in the renewable energy sector. The company was listed by Mayberry 5 years ago, and as a disclaimer, we still remain the largest shareholder, owning just under 9% of the company's ordinary shares. The stock was listed at an IPO price of 50 cents per share, and currently the stock is trading at $1.03 with a corresponding PE of 12 times relative to the main market range of 9 to 10 times, which may suggest the company is either slightly overvalued or the market is simply pricing future earnings into the mix. So let's get into the analysis to see what's happening here. For the first 3 months of this financial year ending June, Wigton's revenue surged by 27%, reaching 622 million, driven by a 24% boost in wind production. The cost of sale decreased by 16%, resulting in a notable increase in gross profit, which now stands at 422 million, a 67% improvement. On the expenses side, costs rose by 26 to reach 196 million. But despite this jumping in expenses, we're seeing the operating profit for the quarter grew to 315 million, reflecting a 40% increase from the 225 million reported back in 2023. After taxes, the company's net profit for the quarter amounted to 165 million, up 143% from the 68 million the previous year. All this translates to an improved EPS from 1 cent to 2 cents, with the trailing EPS now standing at 9 cents. Looking at the balance sheet, the company noted a 3% decrease in assets to 10 billion, and I would have explained this in our last review that this resulted from fully depreciated assets in respect to phase 1 of their operations. Phase 1 has ended, and naturally their assets have come to their useful life, so thus we're seeing this fully depreciated assets here. In terms of shareholders' equity, there was a 15% improvement, bringing the total to 5 billion. We also see improvements on the liabilities side, where liabilities now stand at 5 billion as opposed to 6 billion last year, resulting from the company paying down some long-term debt. Overall, the company seems to be robust, with annual revenues exceeding 2 billion and trailing profits over 900 million, just shy of a billion. While fluctuations in Wigton's quarterly profits may occur, as seen on the third slide, this is just due to the unpredictable weather patterns. The company has a strong track record, operates with low leverage, and consistently maintains a healthy cash flow. And, as we continue to remind investors, Jamaica is targeting 50% renewable energy by 2030. And Wigton is one of the few local companies strategically positioned to secure a new contract supported by over 3 billion cash that we can see on their balance sheet. And again, they were just awarded a 49 megawatt project that will increase their capacity by more than 50% in the coming quarters. And they're also almost complete their negotiations with the OUR and JPS regarding phase 1 of their operations, and this phase will last for another 20 years, which we can expect some efficiencies here. And overall, considering these factors, the medium to long term outlook appears strong. With the stock currently trading at $1.03 with a PE of 12 times. It's slightly overvalued, but Wigton will grow into its valuation as the company increases its production, either through efficiency improvements, from phase one, or winning some more contracts. And we spoke about that earlier. And also, in the upcoming quarters, we are going to see a general strengthening of the stock market as interest rates decline. So Wigton, along with other stocks, may experience some capital gains here. So what are your thoughts, Winston?
Yeah, Wigton is actually positioned well to benefit from the various initiatives from the government to actually expand in the space of renewable energy. And, it's going to be one of those stocks that is going to be a good diversification in your portfolio for years to come, because renewable energy is the way forward right now. Right now, we're at 12% in terms of the renewable mix. And aim, I think it's actually 50% by 2030. So when you think of that, there's so much more scope and growth for Wigton. So make sure you have some of that in your portfolio for that expansion in the energy sector.
Yeah, agreed. I think we have quite a few bids to go over the next 6 years. So let's see how the company positions itself to win some of these bids. Again, $3 billion cash on their balance sheet. So I think they're in a strategic position. Okay, so that's it for Wigton. Let's get into GraceKennedy. Over to you.
GraceKennedy is a global consumer group headquartered in Jamaica with two core businesses: food trading, both in Jamaica and internationally, financial services, including banking, insurance, and remittances. GraceKennedy has consistently shown strong performances across its various business segments through diversification, strategic acquisition, leading to consistent revenue growth. Today, we look at GK's financial highlights, performance drivers, and key metrics. For the first 6 months of 2024, GraceKennedy delivered another impressive performance. Revenue was $84.39 billion, marking a 7% growth over the same period in 2023. Net profit attributable to shareholders of $4.44 billion was a 6% increase over the previous year. Total assets stood at $232.87 billion. Shareholders' equity stood at $82.79 billion, and earnings per share per stock unit was $4.46, compared to $4.21 the previous year. These results demonstrate the company's ongoing ability to grow despite market challenges. Now, let's look at what's driving this performance. GraceKennedy food business experienced significant growth in both revenue and profit before tax. This was due to effective margin management, cost containment, and target marketing initiatives. GraceKennedy's revenue distribution for June 2024 highlights its diversification across segments. The food trading segment accounted for 79% of total revenues, banking and investment 6%, insurance 10%, and money services 5%. This diverse portfolio further strengthens the company's risk management, ensuring stability even in a challenging market condition. On the financial services side, GraceKennedy Financial Group also saw growth. This was driven primarily by the banking, investments, and insurance sector. First Global Bank Limited reported higher revenues and profits due to increased loan volumes and digital transactions. The GK Capital Management Limited improved its revenue and profits before taxes through better execution of investment banking transactions, despite challenges in the Jamaican equities market. GK quarterly profit movements, based on the graph that we're looking at here, you'll realize that, the quarter over quarter, you've seen some consistency in terms of growth. And that's what you want to see. They are a mature company, so you're not going to see high one-offs, but it's good to see stable, steady growth, which is what we have come to expect from GraceKennedy. And, just that stable, steady growth, it makes it one of the better stocks to weather different financial climates. I mean, if you look at even during the pandemic, GK's profit was probably at its highest then, which speaks to the resilience of a stock like GK. So definitely one of the stocks that you should be looking to add to your portfolio to provide some stability, right? Now we're going to look at the price graph. GK's price history would suggest that there's significant upside from the price that we're at right now. GK is currently trading at $73.94. At its highest price, based on that graph, we're seeing $84.81. But if we were to go back a little bit further, GK was trading over $110 per share. I think, with the right market conditions, GK is going to easily get back to that position. And we're very close to the lowest the stock has traded in this period. So the entry point for purchasing this stock, 73 versus the low of $70.09, is a very good entry point. So if it's not a stock that you have in your portfolio, I actually recommend this stock for your portfolio. What are your thoughts on GK, Rachel?
Thanks, Winston. GK is a solid company, great brand recognition locally and with the diaspora. It remains a resilient conglomerate which continues to demonstrate strong performance in its business segments. As you mentioned earlier, the company reported growth for this period in 3 of their 4 business segments, with the food segment, the dominant segment here, increasing by $5 billion to reach $66 billion. And we can expect continued growth in this food segment as GK is actively expanding through acquisitions. They are also aiming to enhance product development to include their healthier food options. I'm excited for that. And the financial services segment is also performing well, driven by strong demand for its banking and insurance products. As you mentioned earlier, the company is always looking for ways to broaden that customer base, which is also good. Overall, GK is a solid conglomerate, achieving $84 billion in revenues with an 8% year-on-year growth. While it's easier to achieve a double-digit growth when generating millions, but increasing revenues by $6 billion to reach $84 billion is truly impressive. They have been signaling actually that they want to be the leading Caribbean brand by 2030, and it appears to be well on its way to achieving this goal. With a stock price nearing $74 and a PE of 9 times, it's a stock I would consider adding to my portfolio. It was actually one of the first stocks I purchased when I started investments. And, as I mentioned earlier, as the market improves and interest rates decrease, we can anticipate stock prices to rise. Also, it's a good dividend paying stock, and the company's buyback program that they're currently doing only reflects a strong commitment to enhancing shareholder value and its own beliefs in the company's long-term growth prospects. So again, it's a stock that I would add to my portfolio at $74. It's a great stock, so it's a buy for me, guys. Take advantage of that opportunity while it's still on the table. And that's it for today's discussions. I'd like to thank reviewers for tuning in today. Your support is always appreciated. Also, thank you to my co-host Winston for contributing to today's discussions.
Thank you, Rachel.
If you're curious about updates on our virtual investor forum and updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, and remember, wise investors, slow and steady, wins the race. Thank you.